Hello everyone, welcome back. This is Jeff Craig from Mysteel's Iron Ore Department, here to give you the latest on China's ferrous market. Let's dive in. The ferrous market remained range-bound over the past week, with steel fundamentals staying relatively steady. No significant improvements in market sentiment have been observed, given the absence of any major domestic stimulus policies exceeding expectations following the conclusion of the Political Bureau of the Communist Party of China Central Committee meeting on Friday. In addition, Trump's shifting stance on China's exports continues to inject uncertainty into the market, contributing to volatility during this period. Steel market fundamentals remained relatively firm, evidenced by a further decline in total steel inventories. However, the pace of destocking has slowed this past week, indicating potential pressure in the coming weeks. Notably, apparent consumption for both long steel and flat steel has declined, suggesting a potential peak in downstream demand. While rebar demand weakened, some regions across China experienced shortages in certain specifications, partially mitigating downward price pressures. Furthermore, despite a bleak export outlook, current HRC demand remains resilient, as steel mills push forward export plans to capitalize on pre-tariff pricing. Moreover, the accumulation of steel billet inventories has decelerated, supported by robust billet export demand, as billets are included in some tariff target lists. Both integrated and mini mills increased their production over the past week. In particular, hot metal production growth exceeded market expectations, as routine maintenance was completed and some steel mills resumed production ahead of scheduled due to favorable profits. This, combined with expectations for a pre-holiday replenishment demand, has bolstered iron ore prices during this period. Although discharging volumes at ports rose and arrivals fell, portside inventories still climbed, primarily due to improving unloading efficiency at some ports with better weather conditions. In addition, no further rounds of coke price hikes were observed last week. However, a potential increase is anticipated as total coke inventory declined amid rising hot metal production. The success of a second round of price hikes will depend on the profit margins of steel mills in the coming weeks. Downstream demand is expected to face downward pressure in May, with some southern regions gradually entering their traditional rainy season. Market confidence is unlikely to rebound sharply due to multiple global uncertainties and the lack of imminent domestic stimulus policies. However, raw materials, particularly iron ore, are expected to be bolstered by sustained high levels of hot metal production, which will likely exhibit greater resilience moving forward. Thanks for tuning in to this week's China Ferrous Market Update. See you next time.